Hello, everybody. So today I just want to go over a few things over the past few days. So the first point is, unfortunately, Tesla is back. I woke up this morning to some of my leaps being up like 35% or something in a single day. So anyways, I'm done adding to Tesla, back to 194. I'm happy about it. It's too bad because, of course, I had some dry powder already, right? In case it dropped below 140. It never did. I am glad I bought when I did. I bought on April 6, April 15, April 23rd. This coincides with moments where I made videos on the topic on the channel. And you may remember I had said... it really sucks. There's really no sense in me covering anything else because Tesla was so cheap. And I was seeing it as so cheap that really my buys were mostly focused on Tesla. It was hard justifying buying anything else, at least for me, given my conviction in this company. Anyways, it's up 36% from those lows, right? It's up quite a bit in just a few days. And, will it go back down again? You bet. But who knows if it's going to get back to that 140 level? Maybe it's a resistance now, as they say. Maybe you got to draw a line now from 100 to 140, and then maybe the next time it drops, it will only drop back to a 190 or something like that. But not buying anymore at this point. Will we get FUD again? Probably. We have the vote coming up. That's probably going to give a little bit of FUD. And then 8/8, maybe it will be a sell the news event on August 8. Maybe some people will sell the stock. But the truth is, I have no idea where this stock is going over a 1 year, 2 year period. But that's a 10-year hold. And so since it's a 10-year hold, I really don't care that much about the short-term price movement. I just look at it as an opportunity. All I wanted to say is that this proves once again that and I see it in my videos on the channel, this helps me be a better investor. Whenever I get a lot of pushback, whenever there's no consensus on an idea and I get a lot of pushback, it's typically a counter indicator. It's typically an indicator that I might be onto something. And clearly my Tesla videos got a lot of pushback. I was losing subscribers whenever I was publishing something about Tesla. That's a counter indicator. That remains the case. That has been the case for the longest time. I remember Bitcoin, when Bitcoin hits the lowest, the biggest bottom, when it's peak fear, that's usually a sign that things are about to turn around. That happened for Tesla. Tesla right now is expensive again. I'm happy. I'm holding. Moving on to new stocks. Now let's talk about another stock that everybody was hoping would go up today, and it didn't. Actually, if you look at MicroStrategy, it barely moved. If this stock is moving in relation to Bitcoin, and Bitcoin goes up, this stock is going to go up more. Bitcoin goes down, this stock is going to go down more. Right now, it's a range of the value of a Bitcoin on their balance sheet, right? More than 200,000 coins. They have about $15 billion worth of Bitcoin on the balance sheet, and the stock is trading between 1.5 and 1.6x the number of Bitcoin on the balance sheet. That is the play here. And so that alone is attractive, of course, compared to an ETF, because you get some leverage on that alone. But the question is, what is going to be the multiple that the market is going to give MicroStrategy at the last peak? You may remember. Let me write this out. At the last peak, it was trading, if I remember correctly, at a 6 to 7x of a Bitcoin on the balance sheet at the last peak. Right now, we're trading at a 1.5x. I'm not sure we're going to get to a 6 or 7x, but in my view, we should get higher than a 1.5x. Could we get a 3x? Could we get a 4.5x? That seems plausible to me, given that there's quite a bit of banks that actually trade higher than 1.5 the value on their balance sheet. For bank, of course, they look at the book value. JP Morgan is trading at 1.9 times book value. Well, theoretically, supposedly the best bank, to quote Elon Musk, we'll see how risk-free it really is. We'll see how best it really is. Remember that big banks, really, the only difference is that a big bank, a systematically relevant bank, you get a bail-in, and you don't get a bailout. You get a bail-in. That's kind of the main difference. But nonetheless, these banks, they're trading at a multiple of a melting ice cube. That multiple is the US dollar, right? That book value is held in the form of bonds, in the form of commercial paper. It's trading at a multiple of a melting ice cube, while MicroStrategy is trading at a multiple of an exponentially growing asset, of an asset that grows much faster. So you get multiple things, in my view, that are not priced in for MicroStrategy, which is why I think we're going to get some multiple expansion in addition to the increase in the value of Bitcoin. One thing that is not priced in my view, is the present value of the future cash flows that could happen to Bitcoin. MicroStrategy might do something. They have an announcement coming up in their conference that starts tomorrow. There may be some announcements. I'm thinking could MicroStrategy develop some sort of their own KYC Lightning solution where they would earn some fees on their own Bitcoin and they could do kind of a layer 2 on their Bitcoin. I think that would be one of the chief ways a company like MicroStrategy could earn yield. Another way would be to pledge that Bitcoin on an exchange as a pair, right? You could pledge a pair between, say, USDC and Bitcoin, provided that they could raise that amount. Now, that's more down the road, because I have no doubt that a company like MicroStrategy will want the utmost security if they start to want to earn yield on Bitcoin. But I think over very long term, it's inevitable that there will be some yield. The present value of that yield is not priced in. MicroStrategy also should see a premium because a lot of people can't buy the spot Bitcoin ETF, and a lot of people can't buy the Bitcoin itself. And we saw the announcement two days ago that some banks can't use ETFs, Bitcoin ETFs, as leverage. Well, MicroStrategy is not a Bitcoin ETF. MicroStrategy is a stock, and you can use that as collateral. And so a lot of institutions may want to hold MicroStrategy and not Bitcoin in order to use that as a collateral to raise money, to raise funds. MicroStrategy is attractive because A, some people can only own stocks, B, some people can only own bonds, and then C, you have a lot of people who want to own options, and the options on MicroStrategy are very expensive, but that's what some people want. Some people want volatility, and that's kind of what they do. And let's see, the dilution is accretive, right? They have this open facility where they can issue new shares at any point in time and take advantage of their premium or their discount. And I think this creates a way for MicroStrategy to once again earn more money, because if they dilute the shareholder to buy Bitcoin, if they do that at good times, at time opportune moments, then they can create value for the shareholders. Obviously, right now it makes more sense to do this through bonds, but sure enough, they took advantage of stock issuance a while back. And so because of all of that, I believe this is a company that should trade higher. And of course, the Bitcoin strategy dwarfs now the MicroStrategy, the business, the software business. But remember, the software business, in my view, it is still worth probably $1 billion. So you have a little bit of that to add to MicroStrategy. Moving on to SOFI. So SOFI is one stock that I bought today. I am cautiously optimistic about SOFI. You may remember I've been a little upset at SOFI for not fighting crypto. Like, I know, of course, to get the bank chapter, they had to divest crypto, but I feel like they could have fought it, and that's obviously what Coinbase has been doing. They didn't fight it, and it's kind of like they weren't really good to their customers by shutting down crypto and forcing them to sell. And that's what happened to me. That's what happened to, I think, a lot of people who were using SOFI for crypto. At least I had a small account with them. Anyways, that's more idiosyncratic. This company is a fintech bank. It's a neobank that is tech driven, and only future will tell whether it's a good idea to be a bank and to cater to the digital world. I kind of think there is this duality, this tension as to the future of finance. Will the future of finance take a more modern legacy form, which is then is what SOFI is, right? SOFI is kind of it's still a legacy form. You're still a bank, but you're on a more modern layer. You have a more modern IT stack, more agile, etc. Right, and in the short term, I have little doubt that is the better solution. Or is actually the future of finance going to look like everything moving to the blockchain, everything moving to Web 3, Web 3.0? And I think over the long run, that's what may happen. So right now, SOFI, likely in my view, at the right place, at the right time. But we'll see in the future. But SOFI, to me, it's an investment thesis that is very simple, and it is clearly the one bank, along with the Cash App in the US. But SOFI is clearly the one bank that is getting adopted. They are showing adoption. You can't argue with their numbers. This is my product adoption curve, kind of my style of investing. I want to buy a company when we have early signs of adoption, and I want to get out where there's early signs of slowdown. Like SOFI is solidly in the middle of that S curve, in the middle of the adoption curve. They're solidly in there. If you look at the growth, the year-over-year growth rates over the past 4 quarters, right? This quarter, 44%. Quarter prior, 44%, and 47%, and 44%, and 46%, and you're looking at 5 past quarters. So it's roughly flat. I mean, they're growing roughly at 40%. And as far as the number of products and services they offer, yeah, we've had a slight slowdown because they don't want to take on extra risk by lending too much right now. But the customers are still signing up, so these customers will borrow at some point. The demand for loans right now is not the strongest. The interest rates are very high, but this is a company that should see a major benefit whenever interest rates go down. People are going to be like, let me refinance my credit card debt. Let me refinance my student loans. They're going to be attracted whenever they see these new interest rates lower, and of course, by the way, if I thought interest rates were going higher, I wouldn't own SOFI, but I think they're going lower. That's what I've been thinking. That's what I've been saying for a year and a half. I've been wrong for a year and a half. But that's okay. That's okay. It's still you still gotta use first principles when you think, and you gotta think from scratch. And when I look at the debt, when I think from scratch, I tell myself they're gonna have a choice between lowering interest rate and a depression like we have never seen before. And they are not gonna choose a depression. You can see the banks have started falling again with Republic First Bank over the weekend. That was really muted in the news. Very few people talked about it. But anyways, SOFI. So SOFI. The special case of SOFI, it's a very technical term. My approach to SOFI is called KISS. That's a very technical term. It means keep it simple, stupid. That's how I own SOFI. I know people get very excited about analyzing SOFI, spending 2 hours every other day, posting a long video. To me, it's very simple and stupid. Is the stock growing? It's growing freaking fast. It's super fast. Look at that growth. Look at the number of members registering to SOFI. There is no sign of a slowdown whatsoever in the number of members registering to SOFI. Eventually, sooner or later, these members who bank with SOFI, by the way, who have direct deposit, sooner or later, they'll need a loan. They'll need, I don't know, wedding loan, boat loan, car loan, mortgage, you name it. They'll need a loan at some point. They are members of SOFI. The product is getting adopted. So the adoption, the product, the company is getting adopted, right? So yes, it is. And then are they losing money? No, they're not losing money. They even have gap profits. If you look, I mean, sure, gap profit may help them, say, get in the S&P 500 at some point if they show enough years. I know it's what the market wants. Clearly, the market's not rewarding them for that gap profit. And I personally, if you know this channel, you know I don't care about gap profit. In fact, I don't want them because you got to pay taxes on that. So in fact, I don't want them, but the market likes that. hopefully it helps them at some point. If they get to a larger size, larger market cap, at some point it may help them get in the S&P 500, which, you know, if you own this stock for a 10-year period, which is my preferred time period, that could happen. That's what I think could happen. And lastly, of course, the revenue growth is low. Why is the revenue growth low? Because this is a company that's not taking on a lot of loan. They're not giving out a lot of loan. They are managing themselves very prudently. But as soon as the risk environment lowers, right? As soon as the interest rate environment goes down, as soon as all of that happens, remember that banks roughly, I mean, this is a rough estimate, but banks roughly can grow as fast as they want to, right? Because everybody wants to borrow money. So it's a matter of how much money they want to loan, right? Do they want to loan as much money as possible? Well, they could grow revenue really, really fast. Or do they want to be super conservative, in which case they give out no loans and then they don't grow revenue? It's banks or companies in the lending business in general kind of choose how fast they want to grow. Right now, SOFI is telling us they don't want to grow too fast. They're concerned. And I have to be honest and say that, yeah, Noto was more right about the rate cuts than I was, right? He said we don't see them coming. They had guided for 4 rate cuts at the beginning of this year. Everybody thought they were way too conservative. Turns out they haven't been that conservative. Turns out they probably are privy to some information with the central bank that we retail investors are not privy to. So, you know, kind of the way it works. And I'll conclude with this. So, which stock am I buying now? Well, the answer to that question is there's many stocks that I like right now. I just wanted to focus on financial stocks to keep kind of a theme, and I have a little bit of HIMS. But, you know, I could have put Oddity and I could have put On. I like Oddity and On too. I'm just not going to cover them in this video. These stocks are going to come up in my most undervalued video, which is coming sometime this week. I'm going to make a most undervalued video where I go through my valuations. My 3 recent buy recently are 2 financials and HIMS. Oh, you know I love HIMS on this channel. So SOFI got a little more expensive because they guided their growth down. They're still in the top third, in the top tier cheapest stock in my universe at a 0.29. Keep in mind, SOFI is quite profitable with EBITDA margin of 25%, right? I don't use GAAP profits on the channel. I use actual economic profit. This is an economically sound and profitable company. The market eventually one day will give them credit. Very little doubt about that. Then I added to Shift4, and it's in an under 1% position. I've been trying to build that position. The reason why I bought 4 is I had covered 4 before on the channel, and I didn't like it because there was an acquisition that was impending. A lot of people were saying, oh, there's an acquisition going up. The stock traded up until the 90s, and now it's back down in the 60s because that acquisition is off. And I like that. I don't want to buy a company for a quick gain, for a quick capital gain. That doesn't interest me. I want to own a company for the long run. The acquisition for Shift4 seems off, and I will cover this stock on the I just need more time, but I will cover this stock in greater depth on the channel coming up. What I like very much about Shift4 is that the founder has a connection to SpaceX and to Elon Musk, and I find that very compelling. Again, going back to the whole PayPal mafia thing, to the whole disruption play, to the idea of a 0 to 1 product. I like to invest in firms that have entrepreneurs of this era, of this way of doing business, this disruptive way of doing business. I like that very much. I added to SOFI, as I noted, and lastly, I added to HIMS. HIMS is a gift at $12 and change. This is a company which, in my view, is recession-proof. This is the last thing folks will cut. You know, like ED drugs, hair loss. That's cheap. That's the last thing people will cut in case of a major recession. GDP growth being down, like GDP growth may have an impact on how much of a house you sell or whether you're gonna refinance or take on a lot of debt. But when it comes to these so essential, so personal health issues that people get addressed with HIMS, I don't think they're gonna cut it, or it's the last thing they're gonna cut. And as a result of that, HIMS I find very compelling at these levels, knowing that HIMS is the cheapest stock in my universe. Note for four actually, this is actually higher than that. For four, the gross margin, there is an issue. The gross margin is actually a little lower, but it all depends whether you calculate the interchange fees, you put it in there or not. But for four, it's actually about double that for the EV if you remove the interchange fees from the gross margin. So just keep that in mind if you look at my spreadsheet on four. Anyways, this was it for today's video. This is not investment advice, right? This is just entertainment, no financial advice. I hope you were entertained. I appreciate your likes, appreciate your subscribes. Thank you for watching and have a wonderful day.